NASDAQ August 21st, Monday, beginning of the week. First movement of the week, pullback from the pullback. Market reached up into the last leg down, all the way up to a 50% from the top. 50% retracement. Go down to the 4 hours, and we can see how the price, after coming all the way down here, creating this small pullback, going down again, then going up, and in this area when it went up, it took out the high of this pullback, and that gives us the idea that price may be reaching for higher highs. And then the next day, this was today, Monday, which I had said yesterday that I was seeing that a pullback was in the books, and we had the pullback, a really fast increase in prices, delivered mostly by Nvidia, Tesla, on Palo Alto Networks, on the NASDAQ. Going down to the 1 hour, we see that the price left a gap yesterday after it expanded to the upside. And usually when price expands to the upside, leaving a gap, we can expect an expansion that goes all the way to 167.5 extension, which is this one up here, 162.5. But since it's the NASDAQ usually shoots up higher than that. If it were the S&P 500, it will be perfectly to 162.5. NASDAQ went all the way up to 200%. So right now we have this gap it's kept open, and since it's kept open, and then we have these other two gaps that are also being kept open, we have the possibility of a pullback on this new upside leg. Right now there is a pullback happening right now. It went down all the way to a 25%, a little bit more than that maybe, since it's at 75%, as you can see here. The price is trying to reverse now to the upside one more time. Expect pullbacks all the way to this level at least, and then a gap open for an expansion to the upside. But NASDAQ doesn't usually play by the rules. It's not like S&P 500, which plays a little bit better, more exact in many ways. Let's go down to the half hour. Same thing. Although on the half hour you can begin to see a formation in that pullback. All of these formations that we see on the price delivery is just visual representations of data. It's just information. We go down to the 5-minute. We can see what appears to be a megaphone pattern, or a broadening wedge pattern, where the price starts smaller and then it keeps opening it up and opening it up more and more and more. And usually, and this goes in accordance to theory by the Elliott wave theory, we got 5 different waves of 5 different points that we can actually see on this pullback. I'm not gonna show you exactly where the points because you can see it. And now the price is going above it, and while it's going above it, it's leaving gaps behind, which means that an expansion is in the play right now, is in the books. So this formation, this pattern right now is delivering perfectly what is the idea of what a leg is supposed to do when expansion is coming. So all that we see as patterns and whatnot is just the same information, the same Elliott wave theory or order blocks or bull flags, bear flags. Everything is the same thing. It's just expressed in different words. Right now on the 5 minute we have 3 green candles, one consecutively after the other one. And as this breaks out here from this megaphone pattern, I expect a pullback that is gonna hit this trend line one more time, and then I expect it to expand to the upside. I expect it to go to the 162.5 at least, and then maybe even higher than that, but we'll see because it's still too early on the night. This is just the Asian session. London session is coming, and we got Nvidia earnings on Wednesday, which are gonna be make or break the market. But at the moment, we'll see that the market is still pricing higher, delivering higher prices, and the possibility that it's still gonna keep doing that is very high right now. As we can see on the daily, the Monday candle showed us that prices were more than willing to go up because they closed above the body of Thursday candle. They close above the body of Friday candle, obviously, and they reach through this week on Thursday. And as I said on my previous video, wicks are considered gaps in the market, and gaps are usually read on a basis of 50%, so like halfway of the candle. If it's reached through and then it's penetrated beyond it, it's considered a bullish move. And as you can see on Monday, it reached through it, but it came back down again. So all of this works together to form the market. This is how the algorithm works, and that's why I tried to explain it like that. And that is it. Thank you.